Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:42 p.m. on a rainy evening here on the New Jersey, New York City waterfront, across from good old Wall Street, the World Financial Center, Freedom Tower, as we call it these days. Um, Today is June 10th, 2018. The session will be recorded, uploaded on the Clueless Trading YouTube channel for viewing by anyone, for all members as well as anyone out there, because it's free. So tell everyone to go visit Clueless Trading, the YouTube channel. Go to Instagram on Clueless Trading Instagram account, click follow, and all that good stuff. Full disclosure, this is purely for financial education and not for any solicitation or advice. Let me try to keep this very brief and very straight to the point. Before that, I'd like you to hear the robotic voice of what we do here, our mission statement. Here we go. Clueless, trading, tactical, not emotional trading. There you go. All right. Clueless trading, tactical, not emotional trading. And we mean every word of it. Every single day, every single moment, we try to eliminate the element of emotion, which is pretty much all the time a profit killer, long and short, and makes us do very stupid things. So we try to eliminate the emotional element out of our tactical robotic trading that we do based on what technical charts are doing, and also the predictive analytics of what might happen, and the probability of a winning trade, and the probability of basically the probability of a winning trade, whether they be a long trade via calls, or whether they be a short trade via puts, right? That's what we try to do here. So just I keep on repeating it. I will always keep on repeating it, because that is the mission statement of Clueless Trading. Tactical, not emotional trading. Let's move on. So here we are. And I'll highly, highly suggest that every one of you who is listening to this, go to the Clueless Trading YouTube channel and listen to the Thursday's videocast. That was very detailed, very concise, approximately, I think, 30 minutes, and probably one of the best, not one, yeah, probably one of the best, very concise videos that I've done explaining what might go wrong this coming week. Okay? So you have to listen to this. And then, of course, listen to tonight's broadcast. And I think you'll be in good shape to fight our enemies, which are the algorithmic high-frequency trading volatility programs, which attack us and sneak up upon us and ambush us. They try to do it, but we know what they're hiding, so we know what to do. And that's a fact. All right? So make sure you listen to this one. It's been there for the last couple of days, 3 days. Strategic market stock forecast, critical week ahead, North Korea, G7, Fed FOMC rate meetings, blah, blah, blah. Okay? Everything explained in detail, with economic catalysts that are coming up this week, including the most important one, which is Wednesday, 2 p.m. and 2:30 p.m., the press conference by our esteemed Fed chairman, Mr. Jerome Powell. Fantastic gentleman. And his press conference that will follow the rate hike, which is most likely coming up this week. Okay. On that note, let's dive into the charts here. We had, before we dive into the charts, let me give you a little background. We had a lot of stuff happen this weekend. I didn't want to jam the Twitter with every little thing that was coming out. The bottom line is the G7 meeting happened. There was a lot of internal squabbles between the US and the other G7 leaders, European and Canada, which is right on the target right now of good old Donald's Twitter attacks, right? Justin Trudeau. So, and you all know that. I'll be posting one or two of those pieces up there. The bottom line is that after President Trump left on an interview, Justin Trudeau, the Canadian premier, basically said he was very, that the Canadians were insulted by what the Americans were trying to do. that we are the closest allies ever, and he felt that he would basically go ahead and impose tariffs on U.S. Goods and all the stuff that we send to Canada, and that they wouldn't be pushed around. Well, 30,000 feet above on Air Force One, as President Trump is flying, he sees that. He flies in a rage, and he goes out, and basically they start, and he really goes hard on Justin Trudeau. Called all kinds of names, and that's what's going on right now. So wouldn't you assume that futures, that the way some of the headlines in the media ran, like, oh my God, it's all over, the G7 has been completely fallen apart, blah blah blah. That's just what am I looking at? That's for mass consumption. The real fact is, in my opinion, is that the layers of negotiations that go on aside from the headline back and forth are continuing fine. And the fact remains that they're tough negotiations, because every country is going to look to their benefit. Obviously, we're going to look to our benefit. The Canadians are look to, save their farmers and all that type of stuff. Because one of the biggest gripes that Donald has is that Canadian milk. I think that, it's true. When we ship milk, export milk to dairy to Canada, they charge a 300% or 260% tariff. How the heck do the Canadians afford milk then? I don't know. That's a mystery to me. So I should ask my brother-in-law and my sister-in-law whether they even touch U.S. milk or pay their mortgage. I guess they have to, pick and choose. I'm just kidding around. The bottom line is that you would assume that with this type of headline friction going on, that futures would collapse. Well, futures opened down about 7.5, 8 points. Right now, futures are almost going positive. Right now, you're looking at it behind you. This is the live E-mini charts. And you can see here that futures are down about 2.25 points. Whoa. That's exactly what I'm saying. It is not always the headline news. It's the reaction of the markets, and reading in between the lines, which I think I'm pretty good at, is what will determine whether or not you are going to make money in this market or not. And in my estimation, it's not very rosy. It is some very serious stuff going on there, where we have some serious friction with our allies. And these are allies, by the way. They're not our enemies. This is not Iran and the Iranian government. You're talking about Canada. You're talking about Germany. You're talking about France. These are our allies. So economic issues can cause friction, but that doesn't mean we have to be a little bit careful and not completely isolate our allies, because the United States of America, the greatest nation in the world, in my estimation, and I've seen a lot, believe me, okay, is not an isolated island. So we have to be careful of what we do, because if things get really nasty, which I explained in my past video, and get really nasty, we are going to get hurt. There's no question about it. Okay, this is a global economy, whether one likes it or not. That's just the way time progresses. We have to fix some imbalances, no question about it. I'm all for it, but you can't break the system. You cannot reinvent the system, because there is no system to reinvent, regardless of what ideology some people might profess. And yet, this is coming from a hardcore capitalist. All right, and a patriot. Let's move on. So risk is always there. Anyway, futures are behaving well. That means global players. And I looked at some the foreign markets right now, Nikkei futures and stuff. They're up slightly. So I was very, very curious to see how global markets should react. And this is what we're seeing. The patterns are intact. We're going to go into that in a minute. This is where we are on the 1-hour charts. Looking pretty damn good, if you ask me. Now, nothing to get too excited about, because we might wake up in the morning, in the middle of the night, I think we'll be getting the big news coming out of, from Singapore. I'm just going to say Singapore. Some Singapore, where President Trump is meeting Kim Il-jung, the North Korean dictator, right? Premier, which I think will be a fantastic meeting. I was telling a good friend of mine that if they hug, markets are going to be up 200 points. And if they really give it, if the handshake, markets are going to be up 100 points, and if they really like hug each other and do some, belly rubs and stuff, I'm just kidding. They're both pretty heavy guys, right? Well, Kim Il-jung is much heavier. So the bottom line is that markets will be up 300 points, just the way it goes. It's the optics which matter, what looks, and then of course the feel, and then the hardcore negotiations and stuff is the real news will never come out, trust me. But we're on a good path with what's happening on the Asian Peninsula with President Trump's victory in getting this summit going, which I think is huge. Okay, so aside from that, don't expect perfection, don't expect some sort of utopian situation. I'm simply saying that it's a positive event. So we'll see what happens. So if some negative stuff comes out and they both walk out and they start tweeting each other, well, I don't know if Kim Il-jung tweets, but if good old Donald starts tweeting against and calling him, that he should be eating a fat cheeseburger instead of sitting on a summit because he had nothing substantive to talk about and stuff like that, trust me, we will be down 400 to 500 points tomorrow. Do I think that's going to happen? No, I think it's a low probability event. But this is game theory. We have to know what all the outcomes are. And I'm making this as simple as possible. Trust me, you got to keep this somewhat simple, a little bit entertaining, because no one wants to know. People who are not passionate about global economics and finance and the correlations between these big summits and what markets feel and how Wall Street reacts, for them it's very dry stuff. Trust me. It's not bar talk, you know what I'm saying? This is serious stuff. To me, it's fun. It's like a human soap opera going on with huge consequences. So I try to keep it a little bit entertaining. Okay, on that note, let's start off by, so that's the immediate event within the next 24 hours, right? And as we sleep. And I'll be up I'll probably just be checking things like all through the night. So saying all that, let's take and then the Fed meeting on Wednesday, which is very critical, very critical. And I think that's going to be a nervous event, but will have somewhat of a positive outcome. However, I've explained very clearly that if the Fed goes hawkish and they imply that they're going to raise rates, more often than not, which more often means more than 4 times, trust me, the markets are not going to like it. 10-year government bond yields will spike. Emerging markets will croak. Because after all, their debt is marked in US dollars, and it's not going to be a fun event. And I explained all that on Thursday's video. But we're prepared for it. And that's what we're going to look at on the charts right now. Fair enough? So far, you guys got what I just explained? Yes? Yes. Good. So let's start off with what we normally do. And this is the most effective way of looking at things, is by, let's say, for example, we knew nothing and we landed from not Mars, from Venus or from Pluto, and we said, hey, we want to trade, we want to be traders, and we want to track clueless day trading charts. I heard that guy's good and he makes money even in really crappy markets. So let's get in there. And let's say you landed from Pluto, you have no idea what's going on, you have no idea who Trump is, you think he's some sort of like alien from another planet, and you look at Kim Il-jung, he's an alien from another distant planet. So you're like, okay, all I'm going to do is I'm just going to look at charts. So let's try to do that, all right? Let's not talk about any news events, nothing. I've already explained all that stuff. Let's just look at charts. So he goes, because Clueless always says you got to track these charts and you got to trade off them, you got to understand the patterns and all that good stuff. So considering that you both, you all landed from some distant planet here on Earth, you want to make some fat money, and you just want to trade the charts. So let's trade the charts. All right. So that's what we're doing. The inverse head and shoulder, very intact. You can clearly see what's going on here. Now, this is what we're talking now. I like the reaction of the markets. Futures are down 2. If I was heavy short going into this event, which we are not, and the shorts out there on the Globex markets, here and overseas, are right now not feeling good because they are losing money. Because I'm sure some of them shorted the market right when it opened at 6 p.m. today, which is approximately here, right there, 6 p.m. And they shorted. It went down a little bit, but they're not following clueless day trading charts. They don't know what the lows are. We know that the neckline is a support at 27.72. Those guys don't know what they're looking at. So now they're getting blasted. Let's change the color. Now they're getting blasted. So the short covering is on. This is looking pretty good. This is a rising wedge. It's a channel. Here was your consolidation. All happened within an hour. This is the close on Friday. And this is what's going on right now. So for a short, this is not a good setup at all. So looking at it right now, it is looking like you can consider this to be a cup. Here's your handle. And what you're seeing right in front of you in real time, global Globex action. Courtesy of Clueless Day Trading. You're seeing a cup and handle breakout in progress. Exactly as I said. Short term, we're making new highs because now we're broken above this green line here, which was the double top. This green line was the double top. It was a triple top on Friday's close. And now we are above it. And rising into this upper end of the channel, which is around 27.85 to 27.86, roughly about 5 or 6 points from where we are right now, because currently, as I speak, at 8:59 p.m. Eastern Standard Time, New York time, we're at 27.80 on the dot. That's fantastic. We are at 27.80 right here. We are right at 27.80. Can't get any better than this. We like these round numbers, don't we? So upper end of this is around 27.85, 27.86. You're talking about 5 points. And if things stay the way it is, we are going to hit that 5 points by the time we finish this session in the next couple of 15, 20 minutes. Who knows? We might. Because this is a 15-minute chart, right? So in the next 15 minutes, we might get up 5 points because the shorts might just say, oops, no good, got to cover. And we bump up 3-4 points. Or we might hit that at the open. Now, if we do hit that right away, you can rest assured, and standard, how it works. It gets to the upper end of this wide channel, and then it pulls back. So we might hit that overnight. Can't do anything about it. You're not a futures trader, and you'll see the market pull back to retest the 27.80 level again. If things come out to be extremely positive from Southeast Asia, from Singapore, and the hugs and the belly rubs, or the belly bumps, whatever you call it, start, we're going to blow through this channel real fast on the upper end. And we're going to look at that on the, it's laid out very clearly, by the way. It's all mathematical. On the daily charts. We're going to go into that in a few minutes. So this is where we are right now. Pretty damn good stuff, because I honestly expected, I always expect the worst and go for the best. How about that? Like my, dad said a long time ago, as I've mentioned in a few videocasts, if you think life is tough, everything else is easy. So be prepared for life to be tough. Then everything else is easy, because whatever you do is going to fix some of those problems as you go along. If you think everything is easy, which I'm sure a lot of people do, then small things that happen, like getting a parking ticket, is like, whoa, that's such a bad thing that happened to me. That's not the way I lead my life, okay? You know what I'm saying. Small things in life which bother people, it's a waste of time and energy. There we go. It is going. We are down $1.50, $1.50. right now. Let's move on to the next chart. So all the patterns are intact. This is your one head and shoulder breakout. This is this inverse head and shoulder breakout, inverse head and shoulder breakout. There was the double top. We shorted it. We made money. Here's your megaphone pattern that I had drawn back early part of last week. And guess what? We went through the megaphone, huge breakout at 12:15 on the 8th, which is Friday, and we continued forward. I told people to go long multiple times. And we opened down on Friday. We opened down on Friday at there, right there. We opened down at let me see here, 145.99. Bear with me one second. I'm getting there. We are 945. This is where we were with the futures recovered during the night, and then I mean since early morning after being down quite a bit, and then it started to recover. Markets opened up here. There was a slight drop here, and then we started to just move, and we went long, right? And we ended the high of the day for the SPX calls, the 27. What were they? The 2780s, and I'll tell you. Yeah, the 2785s and the 2780s and the 2785, 2790. The ones we were long from the previous day. I think we had cleared out most of our positions from the previous day. But the ones which we got in early intraday, they also went up big time. We did very well on Apple, all that stuff. I don't have time to cover all that because it's already been shown on the Twitter feed. So this is where we are right now. This is your other version, this is your version with the megaphone. And I said that re-entry happened at around 11:30 in the morning. Re-entry into this wide channel, and honestly, markets want to go technically where they want to go. The noise is always there, and it does affect. There's serious stuff going on in the world, right? But it looks like it wants to go to 2785. Looks like it's going to go there. What happens after that, we shall see. That's your megaphone version with the channel and megaphone. Double top, triple top, taken out. Because the more you keep on hitting the resistance, the chances are that if it breaks out, the shorts really get scared. And that's when the short squeeze happens again. So we didn't fail here. Looks like it broke out, as we are seeing in motion right now. After creating a small handle consolidation, which didn't last too long. This version of the same 15-minute chart is showing you downtrend channels. It's showing you the same, it's the same chart, obviously. It's showing you the rising wedge. And right now, we are right at the top of the rising wedge. So there's different things that I'm looking at to determine what might happen. We are overbought. You can see that. There's a lot of momentum on the upside. So at this point, it's very likely, and I'm going to draw this right in front of you. If somebody says, well, where do you think we're going to go? Well, there. Draw this. And what do you think the upper end of this channel is? It's the same. It's approximately around 2787 to 2790. Because all we've been doing is trading. See that? We might do this a little bit, and we get there. And remember, 2792, 2793, 2796, all these translate into S&P 2800. The round number that I've been saying the market wants to go for weeks now, if you all remember. You should remember. And if you don't remember, then review my videocast, look at my charts that I've been presenting. That seems to be the magnet. And we're going to look at that in very clearest terms. And that's the beauty about technical structuring of charts, because you can actually tell where things will go. And along the way, there'll be detours, what we call volatility. But at least we have a level of confidence of what we are trading instead of just trading blindly. That's why I say many times, trade with eyes wide open, eyes and brains wide open. Because what we think and you think and your thoughts and stuff are completely worthless. And by now, you guys should know that. Okay. Now this is the bear kill zone that I said, and this is the Fibonacci. This is the Fibonacci sequence. This shaded line here, if you remember, I'd drawn this a while ago. So this is where we are breaking out of short term. This is 100% 100% retracement level from the Fibonacci level that I had drawn back down here, right? The 0%. So you can just put, I just put the Fibonacci layers on top of it, retracement level. So we are at 100% retracement level. So if we break out of the 100% retracement level, which is right here, where we are right now, well, that was 2780, 26. What is the next Fibonacci? Let's do some magic. And I don't make this up. That's, Mr. Fibonacci sitting there in the heavens somewhere, the great Italian mathematician. So where is the next level of the Fibonacci? It's right up here. It's the 161% or 1.61% retracement level. There's one above it too. You want to see? The 2.61 or 261%. That's at 2950. Whoa! Can't imagine going there, but boy, I don't imagine much. I've seen markets do things far more bullish than I am. Trust me. I think I've never been more bullish than the market. The market's been more bullish than my charts. What does that tell you about what the stock market wants to go? Remember what I just said. Write this down. I have been actually less bullish, as you know. As a tactical trader, I'm always looking at levels and saying, okay, it's going to go higher, but at that point, let's see the reaction, let's move on. Markets have surpassed that continuously over the past couple of years. So I'm far less bullish than the market has proven to be. So the question remains, where do you think the markets are going to go to? In a bear market right away? No, sir. Did you understand what I just said? Dano, Mike, Venkat, good. You guys are smart guys. That's smart, good. Because I'll try that somebody on the street and they'll be just like, this guy's a nut. But you guys got it, what I'm saying. So this one is 2845, gentlemen. So a real breakout out of this level, out of this, what we're seeing happening in front of us, there is a likelihood, because this is basically a large V, right? So realistically speaking, there should be a minor consolidation here, like a V-shaped cup, let's put it this way, and then a pullout. I don't know. Yep, that would be nice. It'll give us a chance to reload more after we go up a little bit. And the little bit is that 2820 level or so. But after that, we should have a slingshot consolidation, as I explained. For a slingshot to throw out the projectile, you need to pull the rubber band back, right, on the slingshot. That creates kinetic energy, and you let it go, boom, it goes. So that's why when markets, these handles that they're created, pick up that kinetic energy, build up the kinetic energy, and then it springs forward. Because if there are no pullbacks, then what do? Keep on buying higher and higher prices? Doesn't make sense, right? If you think about it. So let's go into this move here. At this point, 2780, being a 1 hour, 15 minute, each of the candle being 15 minute, we can project that we are going to go to the 161 fib, which is 2845. It's quite a bit from here. Let's calculate out what 2845 is, and we'll look at that on the daily charts in a few seconds. We're at 2781 right now, approximately. Futures are down 2.25. So let's say we're at 2780 to 2745. We are basically looking at 35 points. Multiply that by a rough approximation of 7. We're talking 245 points we need in order to get to the Fib 161 extension, or Fib 1.61. Okay, so this move here, if we break out of this level, of the 2780 level where we're at, we are talking about the Dow rallying 245 points. Do you think the Dow can rally 245 points this week? I think it can, with a Fed which I don't want to get it too much in detail, but one of the things the market's not estimating is the Fed's unwinding of the balance sheet. And I'm going to put that article up so you can read it in detail. It's pretty easy to understand. We have $2 trillion that the Fed has bought overall, with the, as the quantitative easing program, and all the criticism the Fed doesn't know what they're doing. We're just going to printing paper money, blah, blah, blah. Remember that? When Obama was president, we are just driving ourselves into the ground. In the meantime, we're printing money right, left, and center. Well, the Fed left the quantitative easing program and the so-called printing money, which they didn't. They don't print money, okay? I don't care what conspiracy theorist you're listening to. So the bottom line is that that all ended in 2016. They said, that's it. The market's over. Well, this is 2018. We're making new highs. So the garbage that you hear from ideologues on both sides is totally pathetic. I don't believe in extremism on any side. I think you should have a very strong opinion, but you can be an extremist in your ideology, especially your economic ideology. Okay. So to make a long story short, one of the things the market is underestimating, including big shot so-called Wall Street economists, and all of you included, is that the Fed might hint that they are going to slow down on their unwinding. And that means that they're going to wind down a little less, because if they keep on unwinding this $2 trillion on the ledger that they have built up, there's going to be a very sharp rise in interest rates and all kinds of things, nasty things would happen. So the Fed might indicate that because of certain situations in the world, they are looking to basically kind of take it easy a little bit. They'll keep on unwinding their balance sheet. And if you don't know what that means, it's you have to understand a little bit of that. I'll put up that article tonight. You can read it. So they might do that, and that would be hugely positive for the markets. If he even hints that on Wednesday, you're going to move up 200 to 300 points so fast, your head's going to spin, and the SOA, MOHTR, bunker, diaper changing, retail emotional traders are going to be again and again and again saying, oh my God, I should have bought, should have, could have, and all those pathetic things that keep on going on through your head. And the voices you may have that have kept you out of making tactical profits repeatedly are eventually going to drive you mad and sad. How about that? And it's a fact. Think I make these things up? You see that happen all the time in your life, in your trading career. So change those habits. I'm not saying go crazy bullish. I'm simply saying if those circumstances do happen, you're going to move fast. So that 245 points, who knows? Could happen by Wednesday or Thursday or this week. And then we're, in my opinion, are going to be really crazily overbought short term. So let's look at the next chart. The next one is a 1 hour chart. Cleaner because it doesn't have the 15-minute fluctuations built in. Also a very clean chart. Features are down about 2 3/4 right now. We broke out over the neckline. And you can see here, obviously, there's some resistance. Some sellers are coming in as we speak. Right there. Now, things are fine over 2770. That means 10 points. So if we open down 10 points on the futures, don't panic. Because it simply means we are coming down to test the uptrend line. Right there. Now, I'm going to be watching very vigilantly, right? You know that I'm like watching your back. I'm watching my back. I wouldn't like it if it breaks that. And I want to be sitting around because once it breaks this level here, this is another neckline. You can see that. You guys can see that? There. That's the neckline. This one, we broke out of that around noontime on Friday, right there. So there's the support here. But if it breaks this and I start to see this type of candle developing, I'm going to short. I see this type of candle developing even at this level like that. At the open, I'm going to see the reaction of the markets at around this level. And if it looks like another one's developing, I am going to go short till it hits again the downtrend line retest, which happens all the time. This was the breakout. It's a good possibility it could retest. Like I said, if the big handshakes, the big bear hugs between I was going to say Putin, but Kim Il-jung and Donald Trump happen, markets are going to be, going the other way. We're going this way. If it's a chilly reception and those things don't happen, and we'll know it. Trust me. Not that we're sitting there, fly on the wall, watching all this stuff, but there'll be a lot of coverage. And if it breaks that, then we are going to come down to this level here. This is not hard. Now, there were some positive technical developments, which I showed out. This is the vortex indicator. I've used it. I've looked at it every day, but I put it on just for you guys to think. The vortex indicator. For the exact definition of it, please visit Investopedia. This vortex indicator actually crossed over at around 12 o'clock, right there, as we broke through the downtrend line, which I had drawn from the day before. Actually, not from the day before, from the 7th, yeah. So the vortex crossed here. This is a very positive development, because when the vortex starts to come down, and the blue line is, you can see that, and the red line starts to creep up, that means you are going to start to see the market pull back. See? Now sometimes it moves like that, and it crashes like this, and the red line's moving up really fast, but it never crossed, it never really took a nosedive all the way down here. So we could have one of those, because right there was a double barrel reversal, we called it, and you could see the vortex remain crossed over. I mean, it moved sideways. So I'm watching this. You don't need to be an expert on it, but I'm watching it. This was positive, and this told me that Friday would end on a good note. Who called the Dow Jones going green when we were down, what, like 80 points or something? I did. Do you think I just did it out of a whim? No. I looked at the charts. I looked at many different things, and they were saying, okay, they're buying it. Stochastics were moving higher, all that stuff. Okay. So this is your 1 hour chart. So far looking good. We know what the levels are. If we break this uptrend line, then things are going to get very dicey. If we break this uptrend line, either we get support here, because this thing will be all the way down here by that time. Guys, this is not rocket science, all right? But when I'm showing the charts, you don't have to do these charts. I'll do the hard work of doing it. You just have to read them correctly. Now, I'm wrong a bunch of times, because these 1 hour candles, the 15-hour candles are the fastest, obviously, because it's a shorter time frame. But the 1 hour candle sometimes can move down. So I'm watching the 15-minute to see whether the 60-minute candles, which is the 1 hour right here, are going to expand. And sometimes it looks like it's really going to expand, and then boom, they turn around. Generally off the levels that I'm showing, but sometimes it'll slip below that, and just, it could be turning here, because there is a support level here. The support levels of the long tail reversals. You can see that. So I can't really tell exactly what point it's going to turn, but I'm watching it very carefully, trying to use my best possible predictive analytics. But when I'm putting it out there, you guys have to act on it at that moment. That's just the way it is. This is a 1 hour chart, so far looking good. Like I said, we could have a consolidation like that of a bunch of points. We could be down 10 S&P points at the open. But that would simply mean that we have created, again, a so Trump is, I think, still tweeting, fair trade should be called fool trade if it's not reciprocal. I think the tweets need to calm down a little bit at this point. I think he's going a little bit, but that's Donald. What can we do? But I don't particularly, don't like continuous tweets. That's a little childish, if you ask me. Once or twice you got pissed off at Trudeau, mentioned it, a couple of things, just back off then. But continuously tweeting, because I'm just seeing this on my phone here, breaking news, Trump fair trade, full trade. I mean, is it really? I mean, who am I to judge? He's the president. But it just gets, yeah, he's still going at it. He's still going at it. Okay, Donald's still going at it. But I have no comments on this one, because I think it's kind of stupid. It's my opinion. So anyway, so we could be down 10 points, and futures are down 3. And so we would be testing this uptrend line. We shall see what the reaction is, and we'll go from there. Let's take a daily. This is your daily. Keep this quick. This is a very good looking chart at the close on Friday. I called all these moves the bull flag, even the drop out of the bull flag, the reversal hammer. this triangle move, and then the breakout, all called to perfection. At this point, we are approaching levels that we have to watch. This is a bull flag, a classic bull flag at the close on Friday. So if things don't get really hairy between now and market opening tomorrow, then we should be able, and this is what's important, each of these lines are where the big selling or the supply zone started. That's why these lines are drawn. So the next level is 2804. You can see that. The next level above that, where the dam broke. I mean, this was hardcore stuff when we had dropped 1,200 points that day. It was back in, this started on February 4th. Wow, seems like 10 years ago, right? Just in February of this year. That's at 2832. And the infamous 2840 that we keep on talking about, that's when the selling actually started. The selling started here. It started to stabilize, but that 2840 level, it really started to speed up. In fact, there's one more line here. Now remember, this is not the S&P. This is the E-minis. So there's a little right there, and that's at and that's at 2858. And 2880 is where we were, what the highs were for the market. So you can clearly see here that this being the daily chart, it gives you a bigger perspective. In my estimation, doesn't matter how bullish somebody is, the most we should be able to get to based on this, and I've been dead right on this particular type of trading, is the 2832 level, because that takes us to the upper end of this channel. This zone here between 2830 and 2840 should be the max upside move. I just explained that earlier. And from that point, we need to consolidate. Will the consolidation come all the way down to 2700? Oh Lord, if that happens, then we are looking at a 100-point drop, 140-point drop. That means we will be down 980 points. Whoa, 1,000 points almost, 980 points. It won't happen in one day, but if things go really wrong, we could get I'm not going to say we're going to get a 1,000-point drop, but let's just put it, the lower end of this channel is 2,700. That's base level support. Base level support, gentlemen. We break 20, So this is hardcore stuff. I don't think we're going to drop 980 points, but let's say something really terrible happens on the economic side, on the political side, we can drop 900 points, and we have seen that happen before. Excuse me. These candles are 600 points at a clip. Rapid fire shooting, right? Longs panicking, hardcore. We're going to be very tactical. Don't go nuts on one side or another. Just because we have a little bit more room to move. No reason to get too excited. No reason at all to get depressed. More reasons to trade on a tactical basis. Write that down. Don't get too excited because the markets are ripping up. Don't get scared and dive into the bunkers and look for your diaper box. If we get one of these red candles, which we just recently got one, 300 points, stay calm. And with my type of charting and stuff that I put out and my alerts, you should be calm. If you're doing this on your own, you should really panic because you don't know what the heck to read on the charts. So this is what we're saying here. All right? Nothing more to explain. We're going to look at the S&P 500 right now. This is S&P 500 daily chart. This is a new one that I constructed over the past couple of days. It's a very clean one. I like it because it's easy to read. You can see here what's going on. Upper end of the channel is approximately 2825 to 2840 if we break out. This is the actual S&P 500. This is where we closed at on Friday. This is not a real-time chart. It's not moving with the futures right now. We know where the base level major support zone is. That's around 2700 to 2720. This move down from here, if we break apart with a massive fat red candle, you will make a ton of money buying the SPY puts, VIX calls, SPY puts. That's what I primarily use, SPX and SPY puts. You can short the RUT. You can pretty much short any of the indices. That's the best way to play it. Individual stocks, sure you can, but the individual stock can burn you because sometimes even on a bad market, they'll turn around and go the other way. We've seen that happen quite often. Case in point, Tesla. Even on a bad market, it can be up 22 points. So the best way to play it, the cleanest way, is to play it to the indices. So we'll see. Upper end of this channel, we know what it is, 28.20. And 28.40 is that level. So this is the daily chart, very clean. Very clean to read and trade. This breaks down. This is 30 points from where we are, 27.50. That's 210 points. Remember, it's a factor of 10. Multiply a factor of 7. So each S&P point is roughly about 7, I would say 7 to 8 Dow points. So you lose 210 points real fast. It's not the end of the world. Things will reset fast. Back to the game. Of course, the rest of the intangibles which I analyze and use in my model, the news coming out, the analysis of that news on an instant basis, all that is provided on a super intelligent, instant real time on my Clueless Aid Trading Twitter feed. I don't think there's any service out there, I'm sure there are, but most of them I don't think they give you. And let me know if they do, which is really good to know that some people do think like me, which is good to have some good company, if you ask me. But I don't think there's many services, as far as I've seen, who give you an instant analysis on Twitter of what the markets will do based on a series of very critical news that hit the tape. I know many of you have been in many services. Have you come across, I'm just curious, where they give you an instant analysis, which is right most of the time, of the meaning of a major piece of news that's hitting the tape during the day? Have you come across any of the services? I'm just curious. Any of you? Like we do here? And you have been on other services, you guys, right? Okay. Well, that's good to know. Not at all. I have. Okay, Mary Beth too. Okay, hi Mary Beth. So that's good because I intend to just my goal is real simple, guys. I don't want to get like all philosophical. I want to keep on improving myself in a big way. I want to get to that point where I know what the frigging market is going to do right at 9:30 a.m. Will it ever happen? No. Am I going to get close to it? Maybe. My gut feeling on the market has become so much more precise just because I literally, I'm deep inside the market in my analysis. So the more I do it, the better I get. That's the reason why I need all of you to click the like button on things that you guys like, so I know which one I need to improve on. It's a biofeedback mechanism. So you need to let me know. So sometimes you're looking at something, you're making money of that, whatever, but you don't click the like button. I look at that during the day. So that analytics will help me improve on those particular segments. So please do that. And do not forget to follow us on Instagram. I don't care if you have an Instagram account or not. Create one, hit Clueless Aid Trading, and follow. We need to grow our follow count. We want to hit at least 1,000 followers so the Facebook algorithms pick it up and run with it. Please. All right? It doesn't cost you a penny. And my social media director, who is also a friend and a trader, who's been doing it, I've been putting some fantastic highlights of our trading videos, trading alerts and charts and stuff, and curating those videos to be very entertaining and very insightful after market hours, because we're not going to give away our real-time precious money-making charts for free on Instagram. For that, come join us at Clueless Aid Trading. Cluelessaid.com, hit subscribe, join us as a free trial or a gold or platinum member. That's the way to do it. Instagram, follow us. Follow us on Facebook. Follow us on LinkedIn, but Instagram and Facebook primarily. Please, make sure you do that and tell everyone else to do that. Because by the time we get all the way up there and we're like 500 to 1,000 subscribers, we will, believe me, of members, I won't have the luxury to privately chat and get, no. So the early birds, who are there, I still talk to them on a personal basis here and there. And, sometimes they text me this and that. Trust me, if I get that busy, it's not like I'm going to turn into a real jerk. I'm already a jerk. No, I'm just kidding. But I won't have the time to interact like that. So let's Let's make it happen. Your support is precious. So, okay, saying all that, we know what we're doing here. Now, so going forward, futures down 4 right now. Let's look at the VIX. Here's the VIX. A full analysis of the VIX. All the levels are posted. We hit the mid-Bollinger on Friday, and the VIX failed again in an inverted hammer, but it's looking like the VIX wants to jump. And for the detailed analysis of it, just listen to the VIX clip on my Thursday video that's posted on the channel. I'm not going to repeat the same thing. So we have to be careful. We have to be selective, no question about it. We have to keep position sizes reasonably small, but there's going to be a lot of structured volatility, as we can clearly see. See, this is going on. So that double top is still acting as resistance. This 15-minute will reset in 15 minutes. Okay? And if it really wants to fall more during the night, let's say during the night we're down like 15, 20 S&P points, then the 15-minute will waddle around like a fat duck at the bottom of the stochastics like that. And this will do. But at one point or another, it will still need to reset higher. But when the markets fall in multiple red candles over a bunch of hours, they tend to normally come down and then kind of move around like this. When markets want to continue to go higher, they go higher. And see the similarity? It's right here at the bottom, and the stochastics stay above 80, and the markets basically do the impulse moves as they did on the 6th. I'll entertain a couple of quick questions, and then we're going to wrap up. We want to keep this short. Any questions? Anyone? None? Okay. Mary Beth, any quick questions? Mike, Dano? No, she's good. Okay, good. The way I'm approaching the whole thing here, I'm ready for pretty much anything that comes our way. Movements are going to be very fast. Spikes are going to be big, up and down. Play small. You're up, let's say 50%. Even if it goes 100% up, doesn't matter. Take that 50%. Don't bet too big, but be involved. Don't sit around for some perfect moments, because by now you all know that those perfect moments come and go and you don't have chances to react. So bottom line is, I'm on top of the game going forward this week. I'm very excited about this week, actually. And just let's do it. Fed meeting, Fat Man meeting, just kidding. Trump and Kim Il-jung meeting, and I'm going to be sued by Jenny Craig or somebody. Like, why are you calling Fat Man meeting? What is this you again? I'm not. I need to lose a few pounds, so I apologize to that. So bottom line is that there's a lot of stuff going on, but the Fed meeting's the most important. Korea is very important, and we don't really want a full-scale, crazy escalation of the trade dispute. Let the cooler heads prevail. Let's not get too ideological about this matter. We do want America to come on the top. It's our home. We want us to be the winners, but that doesn't mean somebody else has to be a big loser. It also means that we don't have to always believe what happens on the headlines, because I think calmer heads will prevail, and more importantly, the people who really sign these things. And by the way, you guys did notice that Congress, the Republicans in Congress, the GOP, is pushing a bill that's going to force any sort of trade tariffs and stuff to have congressional approval, not unilateral executive orders. That's a big thing. That might stop some of the more excessive trade tariffs that we put out on the world stage to our global partners. I mean, global, and it might not be as severe, because if you need congressional approval, well, Congress and the whole GOP and stuff, they're not really liking this, right? Neither are a lot of U.S. business leaders. In fact, most of them. Right? If this was so great for U.S. business, how come U.S. business is not all like, jumping up and down and saying, yeah, do it? Think about that for a minute. You're doing it for U.S. business to prosper because they're the ones who hire the workers, right? But at the same time, U.S. business corporate leaders are not that excited about going too extreme in fixing some of the imbalances. There's something funny going on here, right? You're trying to help somebody who's not feeling too good and doesn't like being helped like that. I leave that thought in your head because I'm all about U.S. business. I'm not about, let's put it this way. Politicians don't cure, I don't care what stripes and colors they are. They don't cure America's ills. U.S. business does. United States business leaders are the finest in the world. They're the greatest people, if you ask me. The true business leaders who have built America. So if they are completely against it, then we got to sit back a little bit. Because the political leaders running the country, I don't care whether it's Donald, whether it's anybody else, they're not going to be the ones who are going to fix our problems. Believe me when I tell you. On that note, have a great evening. God bless the USA. Thank you for being here. Let's have a fantastic week. Good night.